Event Freelancers, welcome to your new community, connecting you to your next project. Get connected. Sign up now. It's free.
So one thing that this current crisis has really highlighted is that how your business is set up and how you trade can have a huge impact. Should you be a limited company? Should you be self-employed? Should you work through an umbrella company? I personally have a limited company. I'm one of the forgotten. I've lived on very little money for 3 months because I paid myself the 80% of my small salary. So I know that there are many other people who have had to deal with that as well. There's pros and cons to each of these structures, both in terms of how you manage your income, but also how much paperwork and admin is needed to run the business as well. Lucy Cohen runs Mazuma Money, which is an online accountancy firm that specializes in sole traders, freelancers, and SME. We've also been working with Lucy as Connektd to highlight the needs of freelancers in the events industry. And today she's going to give us an insight into the things you need to consider when you're setting up and running your freelance business. Please be aware that any information shared in this session is not considered financial advice. You do need to go to a financial advisor if you want them to help you with your individual situation.
We're live, great. Hello everyone, my name's Lucy. As Steve mentioned, I'm one of the co-founders of Mazuma. We're an accountancy firm that specialises in small micro businesses, freelancers, creative industry, events, that kind of thing. So if you're running a small business, then we are set up entirely for you. What I'm going to do today is just give you a very brief overview about how you potentially could structure your business and what the best way of doing that might be. You've got three main options really. You've probably heard of these before. You've got your sole trader, you've got a limited company, and you've got an umbrella. So feel free, because I am live, as you can see in my hallway actually, feel free to pop any questions into the Q&A, and if I've got time, I'll pick those up and answer those. As Steve said, not specific advice, cover myself there, but I can give you some guidance anyway. But yeah, three main options: a sole trader, a limited company, and an umbrella company. And whilst they all might feel quite similar in how they work, actually they're all very different, and they're really nuanced in terms of what you can and can't do legally with them. Drawing money out of the company, that's the real one there. Is drawing money out of your company is the tricky one with at least two of these options. So let's start off with a sole trader. This is really your basic one, really simple here. So being a sole trader is incredibly simple to set up. You basically just have to start trading. You don't have to have a separate business bank account. You don't have to have a trading as name. You can just start working for somebody and give them an invoice and let them pay you, and that's that. A few rules around it. Within 12 weeks of receiving your first income as a sole trader, you need to have registered with HMRC. But obviously you can start off without having done that. Once you've registered with the HMRC, you'll be registered as a sole trader or self-employed, and then on the self-assessment tax system. So once a year, you'll need to do your self-assessment tax return. And for now, really, in terms of legally reporting, that's it, essentially. As I said here, it's incredibly easy to set up. There's no real setup. You've just got to start trading and then invoice people and let HMRC know. It's very simple in terms of admin. You don't have to even produce a separate set of accounts. You can just stick it all on your tax return as long as you know what is and it's tax deductible. And it's incredibly easy to withdraw money out of your company. So whatever, you don't have to make a profit in order to take money out of the company. You can just, money comes in, money goes out, you can use it for yourself. That's called drawings in a limited company. And there's no legal kind of ramifications for you taking money out of your business as a sole trader. Downside to it really is you've got no legal protection. So as a sole trader, you are not separated whatsoever legally in terms of law. You and your business are as one. So if something goes wrong and someone wants to sue your business, they're suing you personally. That can have, I'm sure Create, who in the last session can give advice around the ramifications of that. But that can have a real impact because it's you personally. You're being sued personally. There's no kind of corporate veil there that allows you to kind of separate. That's one of the main disadvantages of being a sole trader, is there's no legal separation there. Some people also think it looks unprofessional, depending on what it is you want to do, that you're just a sole trader, it's just you. In terms of tax, you're hit by the pretty much the same regime as anyone who's employed. So you'll have your PAYE, or not PAYE, but your kind of basic rate tax bands are the same as they would be in employment. And then you've got class 2 and class 4 national insurance, which you pay based on your profits at the end of the tax year, once you've done your self-assessment tax return. And the benefit of being a sole trader, like I said, easy to set up, easy to draw money out of the company. You can just take it in and out of bank account, it's not a problem. You don't even have to have a separate business bank account. And your accountancy fees are normally pretty low, because it's a more simplistic structure to deal with, the tax rules around it, easier to deal with. So if you're getting an accountant to do that work for you, those fees are going to be lower than they would be on a limited company. The next one we've got is a limited company. So in kind of contrast to a sole trader, a limited company is there's a separation in a limited company between you and it. So you kind of really, especially if you're an owner-managed limited company, you've really got to wrap your head around. You've taken on 3 roles here. So that way, 3 roles. You've got, number 1, you are the director of a limited company. That's job number 1 you have to do. Number 2, you are an employee of that limited company. So you're also an employee. And number 3, you are a shareholder of that limited company. You might be the only shareholder, you might be the only director, and you might be the only employee. But in terms of legality, you've got 3 hats on there. So this is why limited companies are a little bit more tricky. This is why accountancy fees for limited companies are higher, because there are 3 things to do rather than it just being the one of the sole trader. But you have that protection. So I've just talked about sole traders, about it all being one thing. With a limited company, you do have that protection. If someone sues the limited company, they sue the limited company. They're not suing you personally. And that allows you probably a little bit more peace of mind. Likewise, you have protections in terms of potentially credit or loans and borrowing, although post 2008 and credit crunch, most directors of limited companies have to sign a personal guarantee, or a PG, you'll see it's called, to guarantee that if your company can't pay back the money, then you will do it. But there is still, it might not be all of it, it might not be the total amount. There. So limited at the end of it sounds a little bit bigger, sounds a little bit maybe a bit better. It's all really up to you about how you feel about that. The main thing to know, though, around the limited company is that drawing money out of it is more difficult. I say more difficult. To do it legally is more tricky. So as a sole trader, you can just take money in and out of the company. Cool, not a problem. As a limited company, you've got 3 ways of taking that money out. Number 1, if you've put money into the company, you can draw that money out again. So director's loan, that sits there. So maybe you've incurred mileage, you charge it to the company, you can draw it out tax-free. But that's just repaying money that the company owes you. Number 2, you're going to have salary. So as Steve mentioned there in the intro there, one of the forgotten limited, this is the problem we've had with furlough payments, is because you've had that status as number 2, the employee, you're on PAYE, and quite often the advice has been to have a low amount on PAYE to save on tax, and then take the remainder in dividends. Number 3, way of taking money out of the company, dividend payments, which means that you're not taxed as heavily on those. Now, there are some caveats around dividends. Dividends have to be are only legal if they're paid after corporation tax, which is why it's so important to have an accountant to make sure that you're in profit at the point you take dividends, and in profit after corporation tax. If you were investigated and they found out that you were being paying yourself dividends and there wasn't enough profit, retained profit in the company to cover those dividends, you could be penalised quite heavily and taxed on that as salary instead. So that's why engaging with an accountant is so important, just to kind of tick that box so you know where you're at. An accountant can tell you how much you've got left for taking dividends. And then you've got, like I said, PAYE, so you pay yourself that low salary. You can pay yourself a higher salary if you like, but anyone who's ever employed anybody knows you have something called employers' national insurance as well. So not only you're paying yourself your salary and you're making your deductions of your national insurance and your PAYE like you would for any other member of staff, for the privilege of employing people, you have to pay 13.8% national insurance on top of the cost of the salary. So it's a very expensive way of taking money out of the company. Now, historically, people have taken that combination of salary and dividend to give them a kind of a good tax position, and that's all declared on your tax return at the end of the year. So that's another thing you've got to do. As a limited company, you have to submit accounts to Companies House, to HMRC as a limited company, but then also as a director of that company, you'll need to do a personal tax return to declare things like P11D if you have it, or your dividend payments. The Tory government brought in tax on dividends about 5 years ago, so that's changed the amount of dividends you can take tax-free. They're now taxed more heavily, but still not as heavily as just being an employee. So that's a limited company. That's there's additional admin around it. There's additional things to do, but you can make tax savings, and it does offer you protections from places. And lots of companies, I've seen a question pop up here about why do lots of companies prefer to deal with you as a limited company. It's probably a liability thing. So you're a separate, several liability thing as a limited company, so rather than being a sole trader. So they just know that you've probably got different insurance policies based. There's a little bit more protection around that. So that's probably the main reason. Sometimes it's just random policy that companies have that they only deal with limited companies, not individuals. That's down to whoever it is you're engaging with. Just keeping an eye on the time here. The final one I'm going to talk about briefly is umbrella companies. Now, these are kind of a bit of a halfway house, to be perfectly honest. I'm not a huge fan, if I'm entirely honest, because I think if you get a good accountant and you put the work in, a limited company for long-term freelancing is a really good shout. But if you're doing kind of short-term contracts, or you don't want to commit to the admin of a limited company and you want more protection than a sole trader, an umbrella company is a decent way to go. Now, with a limited company, I think on average, people will take home roughly about 80% of their fee value of their invoiced sales in you can draw that out of the company. An umbrella, that drops to around 65%. So you're not taking as much out of that. But on the plus side, you've got someone else to handle it all. So really what happens with an umbrella company is you're engaging through a limited company, but someone else is handling that limited company for you. They're probably what they do in terms of the umbrella work varies greatly depending on who you go with, and there's loads of providers out there. But they're probably invoiced, they might do timesheets, put in mileage claims, all that kind of stuff. You can claim back your expenses, all that sort of thing. And you can sort of dip in and out of this because they're running the limited company, they're doing your invoicing, and they're just paying you through PAYE plus expenses. So you don't really have an awful lot to worry about there. You're not having to worry about doing your tax return. You're not having to worry about submitting statutory accounts or doing your real-time information, payroll filings, all that kind of stuff. That's all taken care of for you. But like I said, you're probably taking home less of that money than you would if you kind of made that commitment to being a limited company yourself. They're great for short-term contracts and for agility, to be able to kind of dip in and out of stuff. And they're great because obviously you can just claim back, you put your mileage expenses in, they claim back, so that can make it a bit more worthwhile. The cost of running it varies, so obviously umbrella companies that look after that for you, they do charge a fee, and those fees vary hugely depending on who you go with. There are specialist umbrella providers out there. Some accountants also offer it alongside what they do. Ask the question, and it's worth shopping around for the fee. Like I said, not a massive fan of them myself for this sort of work, for kind of freelance event work. But because a lot of you will be doing this full time, so even though you're doing lots of different jobs, it's probably worth the investment into a limited company for you, unless of course we have another pandemic and furlough payment hoo-ha, in which case potentially not. And tax-wise, you're just kind of, it's all kind of covered off for you basically. So there's not so much to worry about on that. So I've got 3 minutes left. So that was kind of the very brief rundown of the three. If you are looking for advice or support around this sort of thing, my LinkedIn profile, I think, is up on the page, but I'm Lucy Cohen. Connect with me on LinkedIn. Feel free to get in touch with us online. At some point, we're very active on social. So feel free to drop us an email or drop us a tweet or something and ask some more questions. Like I said, I've given a very, very quick overview there of the different types. The main thing you have to pick with whatever it is that you choose is it's the right thing for you. So think about, what's your end goal here? Is it to save tax? Is it for protection? Is it for the look of it? How professional it looks, or is it to protect yourself from liability? Do you want to save costs? How much take-home pay do you want to have? That's really what you need to look at in terms of making the right decision for you. Everybody's different, and actually everyone's tax position is different. So some people can run a limited company because they've got kids that they employ in the company and use up their tax codes, and it works really well for them. Other people don't have that option, and so maybe it's not as tax efficient a way of dealing with it. It's really worth talking to an accountant to find out what the best setup for you is, because like I said, everyone's different, and even two people who look like they do the same thing, stood next to each other, might have completely different personal tax circumstances, which means that actually what's right for one isn't right for the other. So this is a very, very personal thing that you kind of need to look at. So like I said, feel free to take a look around our site and have a chat with us. Engage with me on social feel free to ask any questions. I'm just going to have a quick look into the questions here. Someone said here, I've heard that there is not much benefit anymore of being limited in terms of tax. Is that true? Yes and no. Like I said, this very much depends on personal circumstances. So if you've got teenage children who you can employ for admin duties in your company and use up their tax code, and you're going to give them pocket money anyway, that can potentially, you can employ them via your company to do company work instead, and that's quite a neat way of doing that, of using up people's tax codes. You can also, lots of people employ their spouses or partners within their companies to do admin and use up tax codes that way. Again, especially if you're going to be taking money out to cover those costs anyhow, it's a really useful way of doing that. And even though dividends are taxed, they're still not taxed as heavily as if you were self-employed, for example. So you're still, you've got ways and means of not hitting that higher rate tax band quite as quickly as if you were self-employed. So that it's not as lucrative as it used to be in terms of tax position, but it's still it is still often quite a good option for people in terms of making some sort of tax saving. 30 seconds, one very quick question. If you're the sole director, employee, shareholder of a limited company, do you have to take a salary, or can you solely take dividends, particularly if you're not sure of how much the company will make? Yeah, absolutely. You can totally take just dividends. That's fine. Just remember, though, that your salary is tax deductible, so it will reduce your net profit, which will reduce your corporation tax bill. But some people have more than one limited company, in which case they might take the dividends out of that company instead. Quick question about partnerships. Yes. Partnerships are a thing, but obviously you need more than one person for that. They are viable. Personal tax rules apply around those. You just split the profit of the partnership into the individual partners, and then your tax on that, like you might be as a sole trader. You do a partnership tax return and a personal tax return each for each partner, but you can't have a partnership with one person, and so that's kind of a limiting factor on that one. And I think I've probably run out of time. I'm sure Steve's about to pop up on my screen and tell me that I've run out of time. But like I said, that's a very brief, very quick overview of the main setups. Loads of information out there on the internet. But like I said, feel free to connect with me on LinkedIn. We do write blogs quite regularly for Connektd, so we can put update information there. If there's any specific things that you'd like to hear about on those blogs, let me know and I can get some content out there for you guys. I've been talking incredibly quickly to get this all into 20 minutes. Apologies. That's it from me. Thank you, everyone.
Event Freelancers, welcome to your new community, connecting you to your next project. Get connected. Sign up now. It's free.